What's good, squad? Today I'm gonna be telling y'all about exhaustion risk. So people ask about what is exhaustion risk, what's not being in full time frame continuity. Technically, like right now, I'm looking at Oracle. This was a trade we took. Technically, we're not in full time frame continuity. We're up on a month, quarter, year, but you really only look at the month, week, day, and 1 hour. So we're up on the month, we're down on the week, we're down on the day, and I think we also are down on 1 hour. Or about to be. All right. So let's get into what is exhaustion risk. Basically, exhaustion risk is when something has been going in one direction for a long time, as well as being at all time highs or 52-week highs. So let me use the replay tool. Let me just delete this right here. So if you look over here where my mouse is at, over in this 52-week range, the 52-week high is like um it's 82 something. All right, so we technically didn't cross it this time, but we were near it. So we were near all time highs. All right. Matter of fact, I think that is the all time high. Oh, well, it's right close to it basically. If you see over there, it says 80-21. Uh, it got up to 80-20. What was this yesterday? Today is the 21st. So it no, it got up to it on Monday, the 19th. So we were pushing all-time highs. If you and this looking at the daily, you can see it's just been going up. If we go to the weekly, you can see that it's just been it would went three back into the right, back up, two fell two down, gone three. It's two 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 two, and even before this, you see it was going up. If I go to the monthly, it's three two ups in a row. So right now we're currently in a two up. All right. So we've just been going up for a while now, ever since this initial, well, as you can see, we just been going up, making lower lows, higher highs. All right. So whenever that happens and you get near the all-time high, even if you don't get near the all-time high, you're gonna run exhaustion risk. Buyers are gonna exhaust. So at some point, there's gonna be a pullback for a while or reversal for a while, whatever. And as straters, we just trade what it gives us. We trade our patterns, whether it's a 2-1-2, 3-1-2, a two down, two up, etc. All right. So we got near exhaustion risk. Okay. So for the week, on Monday, because basically a shooter formed, there was a possibility once it started poking back in the week. See, the thing about it, about um when you're looking for confirmation as far as on your time frames, what you're looking for is for either a two up to be enforced or a two down to be enforced or reversal three. And as you can see, this did go two up, but it started poking back into the body. So at that point, it's no longer enforced. Now, usually you want to trade full time frame continuity, but if you have something going on the weekly, you can trade that on the daily, right? So what do I mean? There might be a week where it's like a red, like for instance, this would have been more than likely not time frame continuity. So if you see it going back in the other direction, you can trade that. Do you have full time frame continuity? No, you don't have full time frame continuity, but it depends on where you're seeing it. If you're seeing that there isn't full time frame continuity on the 15-minute, you tell me you're gonna try and squeeze. I mean, you can scalp a 15-minute, but at the end of the day, you want to see it on a higher time frame if you're gonna try to see it. So we're seeing a conflict. Uh, um, we're basically seeing a conflicting time frame continuity on the week, right? So if I go down to the daily, we're seeing that it's starting to come back in. So what does the next day do? The next day forms a one. It tries to poke back up, forms one, goes back into continuity. Let me go to the week. It goes green, but technically not fully in continuity. It isn't enforced as far as continuity until it's over that. Then that two up will be in force. All right. So we go back down to the daily. And we don't like playing continuations. If you're not in already, we like to play the reversal. All right. So basically, we know the next day that if this whichever side it breaks, we can hop in. But like I said, you normally don't want to play a continuation. It's better to just play a reversal. So because when you're playing a continuation, you don't know when it's going to pull back and go the other way. Because like I said, exhaustion risk, which we are at all time high. We're close to the all time high. All right. So if it breaks to the low, boom, we can hop in puts. And basically that's what it ended up doing today. It basically dumped. And so this is where it's at now. So whenever we're trading something, right, and we're looking for a pattern, the first thing we're going to start doing is plotting our pivots. And what are pivots? Pivots are the top or bottom of candles where people place their stop loss at obvious points, which is the top and bottom. So anybody that was long on this, they're long. Most people are placing their stop loss at the bottom of the candle. If they were short, they placed it at the top. All right. So what happened is once we did the 2-1-2 reversal back to the downside, even though this was a red candle, it still technically is a two up. It doesn't matter what the color is. It's technically a two up, but a conflicting two up nonetheless. It was basically telling you that a reversal was going to happen because it was red, essentially. And this confirmed it. So once it broke below that one, boom, you can hop in that position. All right. You can hop in it. If you saw an entry on a lower time frame, you could have also hopped in, which I don't think on this one you did. Well, you got a two up. If I hide my drawings, hold on. If I hide my drawings, technically I think that was a two up, just barely. No, it was a two down. Otherwise, it would have been three. Um, Turn it back on. But as soon as you saw it come down, you could have hopped in on the 1 hour if you wanted to. But for the most part, with this one, because we didn't see 2-1 actionable signal on the hour, we just took the daily signal. And once it broke below that one, our first target was right here. Let me mark this red. First target, um, second target, third target, and you really could walk it going all the way down, just placing pivots. Does it mean it'll break through all of them? No, it doesn't mean it'll break through all of them. But this right here is a perfect example of exhaustion risk because it's near all time highs and it needed what you could say a healthy pullback, whatever you want to call it, but a reversal essentially. And so it's basically broken through these pivots. When it broke through this pivot, man, I wish I could have caught it in real time. It just exploded. And what happens is when you break through pivots and people have their stop loss right here, right? What's going on is there's already sellers on the market. There's already sellers. What happens is those buyers that were long now become sellers too because now their hypothesis is wrong. So now they're no longer long on it. Now they having to sell their position. So what does that do? That add more sellers to the market, which pushes the price down even more. So that's what happens. That's why we call these things pivot machine guns because they're the losses are I mean the pivots are tight together. And so when you go through it, you get big red candles like this or big green candles in the opposite direction because it's blowing through those pivots. So if it was the opposite, right? Let's say the opposite happened and it had been going down. So envision this being down, like flip, imagine it upside down, right? Imagine people, it's been going down. So people got their stops at the top of it because the price is going down, right? So let me draw that to help you. So price is going down, right? People are putting their stops at the top of the candle. So basically they'll put it at the top of the red candles when it's going down. So what happens when price starts to come back through that previous range, all those people who were short, right? They're now becoming buyers with buyers already on the market. So they're adding to the buyers already on the market and it basically pushes the price up quick, which what we call pivot machine guns because it's busting through all the pivots very fast. And it's basically, like I said, adding more buyers to the market. And that's how you get those big green candles. Same way you got this big red candle, the way it busts through these pivots, that's the same way you would get a big green candle because it's basically turning sellers. shorters into buyers to cover their position. And what you saw right here, it turned buyers into sellers. So let me actually exit through this. Um, exit out of this. Remove because it's making it look like more pivots on the screen. Boom. So right here, you had buyers, people who were long turning into sellers with the already sellers on the market, which caused for price to drop very quick. And so that's why we like to mark our pivots, our obvious pivots, because we know when it hits them, boom, it's gonna, when you go into the downside, boom, it's adding um people who are long, um it's making people who are long sellers. So that's adding to the already sellers, which for us in our put positions make make our prices and stuff go up because that implied volatility is going to go up. So that's what I want to cover. This is a perfect example of a stock going into exhaustion risk, reversing. It's not full time frame continuity technically because the month is still a two up. But when you get an actionable signal on your weekly or even on your daily, you can play that. But like I said, you just want to be careful. You might not want to swing it. That might just be a day trade. All right. So that's how things might not always be in time frame continuity. But if you know what you're doing, you set your pivots, you possibly can play it. The only thing I wouldn't play is like, for instance, when I say don't trade inside bars, right? You're when people like you said don't trade inside bars, but what about this 2-1-2 pattern? You're not actually trading inside the inside bar. You don't want to trade inside the inside bar. So what does that mean? Trading inside the inside bar would have been trading on this day. And as you can see, this range wasn't that high. From here to here, that's 80 cents. You wouldn't want to trade an inside day. Can you trade an inside month? Yes. Why? Because that monthly candle is probably going to be as big as this candle right here. You have more range and room to move around. All right. Can you trade an inside week? Possibly. Is it a big inside week bar? If it's a small one, if it's a short one like this daily is, why would you do that to yourself? You're going to have to go from buying puts to hurrying up and buying calls. So that's what I mean by you don't want to trade inside the inside bar. So you wouldn't want to trade on inside a daily candle. You wouldn't want to scroll down to an hour and play the hour 30, 15 minute and five on an inside day. That's a lot of closing and buying, closing and buying, closing different positions, buying puts now or whatever. It's just better to give yourself more range. And that's why we don't like to trade inside and inside candle, is because why? That's a consolidation. So for example, if I turn that off and I hit the replay, oops, and I close that one out, right? And I scroll down to the 1 hour. You see how tight this range was? Why would you do that to yourself? Why? That's why we don't like trading inside. This is a tight range. This is literally like a 80 cent range. It's not worth trading inside of there, right? But let me see if I can find an inside week if there was one. It might be some inside week worth. See, even on this one, this inside week ain't even worth trading. That's not a big enough range. For the most part, they're not going to be big enough ranges. All right. So that's why you don't want to trade in on an inside bar unless the range is really wide, which you can probably do that in a monthly inside candle, which basically was like Futu before it it went off. All right. It was technically an inside month at first. Before it broke above this, what was that Monday? Yeah, Monday. It was technically an inside month, but it went crazy and it went from being an inside month all the way to being a two up. Now it's obviously going down because of the public offering. So you see what I'm saying? Like if the range is wide enough, yes. If you're getting multiple actionable signals on multiple time frames, I think Futu had a Futu had a double inside week. That's an actionable signal that lets you know that they're about to pick a direction. And it went from being inside, it had a range of going from 158 above 171.96 to push it to being two up on the month. So that's what we mean. That's why you don't want to trade that. All right. Unless you see something like with Futu, where it's like close to being a two up, or like I said, it's a wide range. So if you want to play calls and then flip around, play puts, you can. But like I said, you would want to see actionable signals. The actionable signals are the one. It's your 212 patterns, or for like this one, it was 212. Now it went 213. Um, actually end up breaking up the downside. Did we know about that? Yes, we did. All right. And as you can see, even in this inside candle, see, this could have been a decent inside week to play from 134 to 167. That's $30. You can play an inside week like that, but you can't play these two inside weeks. Those are small inside weeks. It's not worth playing. But that big one candle, or even the one before it, that's a big inside week. That's a difference. All right. And I just want to let y'all know that. All right. So as you can see, this inside week is 122 to 169. That's a wide range. But I'm not finna trade an inside week that's like $3, $2. You know, sometimes they get like real small. Like for instance, down here, look how small this inside week is. This is a $5 inside week, bro. It's not worth it. You see what I'm saying? So thank y'all for watching. Shout out to the squad. Made this for you.